Hey guys, welcome back to the channel. My name is Steph, and in today's video, we're going to be talking about the difference between co-hosting and rental arbitrage, and which might be the better fit for you. Let's get started. So let's talk about co-hosting first. What is co-hosting? Co-hosting is essentially STR property management. What that really means is you are the property manager for that short-term rental and for the owner of the short-term rental. This relationship works more like a partnership. However, some key things to know about co-hosting is that the owner of the property still pays for the utilities, they still pay for the mortgage, they still pay for the furniture. They are basically on the hook for everything. Now, why would an owner want a co-host? So the big difference is the percentage. With co-hosting, you essentially have a management fee. Normal is about 15 to 25%. It can go as high as 30 depending on the market, but let's just go with 20% commission fee. Now, what comes with that commission fee? For a co-host, they are in charge of managing the property itself when it comes to vendors, when it comes to guests, calendar management, guest communications. If something needs to be replenished, they're the ones that do all the ordering. They're basically doing all of the legwork. They are running the show, but the homeowner is the one that's in charge ultimately because they essentially share the profits that are made from each booking. The co-host gets about 20% and the homeowner gets 80%. And the benefit to the homeowner is that it is passive for them, or at least that's the idea. So it becomes a passive way for them to be able to share in the short-term rental revenue that most people know about, but they don't have to do the work. But they do have to pay for somebody to be able to do all of the work. So that is co-hosting in a nutshell. Now let's talk about rental arbitrage. In rental arbitrage, you as the operator are the tenant and the property manager. You're basically the tenant in the traditional sense to a landlord of a long-term rental. That's usually how that relationship works. The tenant or the short-term rental operator / the person that arbitrages, also known as master leasing, they're the ones that are on the hook for the rent. They're on the hook for utilities, furnitures, minor repairs. Usually anything structural stays in the lane of the landlord, but they are responsible for all of that. And they're responsible for getting the bookings too, to make sure that they can pay for all those things. So there is definitely more risk on the arbitrage side. However, there is potentially more reward because they get to keep the margin above the expenses that they have to pay, including the utilities and the rent to the landlord. So one question I hear a lot is, why would a landlord be okay with someone that is master leasing or subleasing the property and putting on Airbnb? Why don't they want to do it themselves? To be honest, the answer is actually pretty simple. They don't want to do it. They don't want to deal with it. There's a reason why they do long-term rentals, and it's because, for the most part, you just get a tenant in there, and then the tenant is on their own. As long as the tenant is paying their rent on time and nothing crazy happens to the house, the landlord doesn't have to really worry about much. And most landlords are totally fine continuing that, even though they know that the margins could be potentially higher. Now, if they pretty much want to have more involvement, co-hosting is probably a better option for that landlord if they want to share with the margins that can be created with short-term rentals. But a lot of traditional landlords, they don't want to have to participate in the risk that comes with a short-term rental, which is why arbitraging is actually not a bad option for somebody that's a landlord and wants their house to stay immaculate and clean. You know, that's another big benefit of why would a landlord pick a rental arbitrager versus just a normal long-term tenant. And the reason why is there's actually quite a few. One, the house is kept in immaculate condition. It has to be. There's a cleaner coming in and out usually about once or twice a week. The person that's arbitraging is treating this like a business. So with that being said, in order for them to be able to make money, they have to keep a clean house. That place has to stay immaculate. They treasure that relationship with the landlord probably a little bit more deeply sometimes than that of a long-term tenant. They take better care of the houses and they will make sure that the rent gets paid on time. That way they can continue to operate their business. So those are the key differences. But let's talk about the numbers and why one versus another might be better. So let's give you an example. My first deal, my first property was actually an arbitrage. I wasn't intentionally trying to make it that, but an opportunity came up and I was able to arbitrage a family's house. So this is what my expenses kind of broke down as. First, my all in for rent and for utilities came out to be $3,200. That was what I was paying. That was my break-even number. Anything above that was going to be mine to keep. So the cool thing was that this property was on average doing about $8,000 a month, roughly, when you break it down over a year span. So let's do this. $8,000 a month minus $3,200 is $4,800. That was my cash flow. That was my margin as an arbitrage or as a rental arbitrager. That's pretty good. Most people are happy if they can do about $15,000 to $2,000 a month. So this was a very good arbitrage property. Now, let's just say this was actually a co-host property instead. So 8,000 times 20%, 0.2 is 1,600. 1,600, if I co-hosted that property, is what I would be getting as a co-host manager, but with no risk, real risk into the deal. Meaning, I'm not on the hook for expenses. I'm not on the hook for utilities. I get 1,600, 20% of the 8,000. Now, we're talking the difference between 4,800 if I did arbitrage with that property, which I did, or if I co-hosted, I got 1,600. So with arbitrage, you can tell in this scenario, there was a lot more room for margin. However, if I didn't make 8,000 for whatever reason, if I made maybe 4,000, my cash flow would be only 800, which is great for a long-term rental, but for a short term, the returns are a lot higher. They're expected to be much higher. So that's kind of a breakdown in the numbers, the difference between why arbitrage versus co-host. So hopefully this helps, guys. Both methods they're solid methods. They're both scalable methods. I do both, or I have experience in both. I no longer have the arbitrage property. I'm not opposed to getting another one if it comes up. But my focus now has been more so on the buying side. I do co-host just because I run my own properties. I've had others that would like me to run theirs as well. So I have built an infrastructure to be able to support that. However, arbitrage versus co-hosting operates the exact same way, and they are great ways to get started in real estate, especially when you don't have that much capital to begin with. Good luck.